Bitcoin has yet again retested the major 4-week-long uptrending support line. Will this be the final retest before a continuation through 38,000, or will we see a breakdown of this level and entrance into a downtrend? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at Bitcoin on the short-term charts, discussing exactly what is happening with the price action, the retest of the major uptrending support line, the possibility of a breakdown, and even the probability of a break over 38,000. Alongside this, we'll go over the market data, traditional markets, and macro charts for Bitcoin. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. We post updates for Bitcoin, analysis, exclusive videos, everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, we do have a VIP sale at the moment. It is 10 to 30% off our memberships. You can go ahead and find out more information over here or find our entire trading track record right over here. We are one of the only channels out there who posts exact entries, exact targets, exact stop losses for our trades, and have over an 80% win rate, over 800 trades in this channel. We've been around for about 2 and a bit years now with over 600 members. You can see exact entries, exact targets for our trade signals, trade justification, and exclusive analysis for every single post. You'll also get access to our general chat, our trading chart and education chat, our news, trade setup, daily video, and help chat. If you're interested, you know how to contact me. Let's dive into video. Starting on that market data. How are we looking for today? Volume, 88 billion over here. We can see a 27.84% rise in that 24-hour volume. Again, Bitcoin has seen a little bit of a move toward the downside, resulting in a pretty big amount of liquidations there for long positions. Taking a look at those long positions, we can see of the 125 million in liquidations, which is up 36%, 93 million of those liquidations came from longs, with only 31 million coming from shorts. So again, a lot of people entering late longs around 38k, saw those positions chopped up essentially as the price retested this major uptrending support. A lot of people entering late short positions. We can see in the last 4 hours alone, we've seen 8 million of the 31 million wrecked. Again, indicating a lot of people are coming down over here and entering late shorts. So we're getting late longs at the top, late shorts at the bottom. Generally how we see the price action move in this market when people are emotionally trading, and they got wrecked. So, you know, if you learn anything from that, look for supports, look for resistances, look for liquidity zones, and do the opposite, okay? Resistance is resistance until it is not. Support is support until it is not. Don't try front run things when you do not have the technical validation to actually suggest there's a probable or there's a statistical probability that the price action will actually break through that level. If you're not doing that and you're trading based on hope, you are essentially gambling. If you gamble in the market, you're going to get results akin to a gambler in a casino. Okay, let's go ahead and move on from there. So looking at that data again, if we go over to that volatility index, we can see on the 30-day period, the volatility index is starting to slope downwards a little bit. Again, more or less plateauing. And on that 60-day period, we can see a little bit of a plateau here on the volatility index. Moving over to the DXY is now retesting that major base of support. We said we have a few options for the DXY in yesterday's video. We said primarily support is support until it is not, and this green level is going to be providing support. This is sitting around 103. If we lose this base of support, we can expect a strong correction all the way down to 101, potentially to 100.8. So we are looking for a pretty large correction there for DXY if we lose this area of support. We can see with that momentum is still falling. However, we are starting to see a little bit of a plateau in the price action, suggesting volatility is starting to reduce. This is potentially indicative of the fact that bulls are starting to step in, and we could see the DXY reverse from this point. We can see the overall downtrending trend line represented by the diagonal trend line here, For the trend to become bullish again, we do need to break above this level. So we are in a downtrend until we break above that level. If at some point in the future we do break above that level, that will likely send the DXY up to retest 108. As of right now, while the DXY is moving down, this is going to be respectively bullish for the S&P 500 and the Dow Jones, and even potentially for Bitcoin. So moving over to the S&P 500, we can see we have a few things we're looking for. Primarily, we are looking for a break of this higher time frame diagonal trend line, this black trend line over here. If we break above it, we will likely see this continuation upwards play out to our all-time high at around 4,800. This move is not yet in play until the price breaks above that diagonal trend line. As of right now, we have broken out of the downtrend on the short term, represented by this orange line. We are in this little zone between that uptrending, that downtrending support, which is going to be this diagonal, and of course this horizontal base of support sitting around 4,500, consolidating and compressing between that breakout point and this base of support. So what's going to happen here is we're either going to see a break above this line, which will trigger and validate the continuation upwards, or we're going to see continuous chop and consolidation around, where inevitably we will either break up or lose its base of support. If we lose a base of support, we are then expecting a continuation to fill the gap down to 4,200. Exactly the same assessment goes for the Dow Jones. We have almost identically the same pattern over here, that downtrending respective resistance, that short-term diagonal trend line. The price action is converging between the two, looking for a break above the diagonal for a continuation upwards and looking for a loss of the support for a continuation down to the lower range. Okay guys, that is enough. Let's go ahead and jump over to Bitcoin. So in today's video, we have a lot to discuss, and when we're talking about, of course, these short-term charts, we'll be going over what is happening here, the next move, the technicals, the structural analysis. We'll be talking about the macro charts very briefly, discussing briefly what we talked about in yesterday's video to remind everyone and to talk to the new viewers about what we're discussing, and of course going over the higher time frame charts, particularly this 12-hour and daily chart in respect to how the price action is looking and possible continuations in either direction. Before we do get into Bitcoin, guys, a quick word from Bitget and BingX. Now, if you do watch the channel, if you like the content and you're in the VIP, or you're not in the VIP and you want to support the channel, go ahead and sign up to those links. I do appreciate it. Let's go ahead and dive into that and then back into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, so let's start on these smaller time frame charts, guys. Primarily, there are a few things we are looking for on the short term, and this short term range now has been going for over 30 days. We started around about the 24th of October, and we're sitting now at the 28th of November. So about 4 weeks and nearly additional week, nearly about 5 weeks. So it's a pretty large range, and it is represented by two things. The most important levels on this consolidation right now are, of course, the major uptrending support line, represented by this diagonal black trend line, and our primary and closest level of resistance, which is going to be our bullish trigger point, represented by the $38,000 resistance, which I've gone ahead and annotated as this red box. So what we are seeing right now is an uptrend moving into our horizontal resistance. Straight away, this tells us we have a pattern called an ascending triangle. Had a few people discuss in the prior video saying this is a rising wedge. The difference between a rising wedge and an ascending triangle is an ascending triangle has a flat base of resistance our rising wedge would have a uptrending diagonal resistance, which is converging to the current uptrending major support line. This would be a reversal structure. So in this instance, we do have an ascending triangle pattern. Now, an ascending triangle pattern is inherently to some degree a bullish pattern. There is a slight statistical probability that we do see break upwards on these patterns and then break toward the downside. That doesn't necessarily lock in the fact that we will see a breakdown, and it's very important to understand that you're not primarily trading based on structures, you're trading based on the technical strength behind buyers and sellers. So even though we have a slight statistical advantage to a break upwards based on the consolidation of the price action, and what that consolidation really translates to in terms of the buying and selling discrepancies and the strength, it doesn't necessarily mean we are hedging primarily and just on that fact. We do need more validation to actually confirm a break up or a breakdown. So then that brings us to this point over here. We have this area of compression. This area of compression is what we call an apex. It is the period of price action at the end of a compression zone where we have very tight converging or very tight compression between our respective uptrending diagonal or downtrending diagonal and level of resistance, which in this instance is our horizontal level. If we take a date analysis, we can see between the current price point and date to the converging point, we're looking around the first week or so of December. So about 9 days remaining of this compression before we do expect a break upwards. Now that does mean we could see a break up or a breakdown any time between now and the 8th of December. So you should already be thinking the 8th of December, we'll likely see a directional move. And I mean directional move, as a breakdown from this trend line will result in a uptrend being lost, and that will result in a downtrend. So we have a directional shift. Or if we break upwards, it will result in the compression and consolidation zone, this entire consolidation structure breaking toward the upside, and a directional move upwards will occur. So we get these directional moves from these these areas of confluence, or these areas of interest, should I say, on the charts. So let's go ahead and zoom out now and look at it from a horizontal perspective. First and foremost, we have that 38K resistance. We can see that is represented by the dotted trend line. If we zoom out to a higher time frame chart, we can see our 38K level is reflected as the base of resistance between the $38,000 and $40,000 high time frame resistance zone. So we go to a daily chart and zoom out. You can see this is going to be this local area of confluence right over here before we saw capitulation down to 32K. Okay, if we flip the chart, we can see again just how that worked out. We had that downtrending resistance right over here. We broke out of that downtrending resistance. We continued toward the upside into that 32K range. If we look at the current price action over here, again, we had that 32K range. We broke toward the upside, resulting in that VRPV gap filling. And of course, we can see now how that VRPV gap has actually filled. You can see if we zoom out to a visible range, we can see it was still a gap over here, resulting in a price action pushing into the 34. We saw historical price action pick up. Again, this is filled upwards and the price is compressed upwards with decreasing volatility and decreasing momentum. So what we are seeing on the chart from a technical standpoint is not unexpected, and it is definitely not a shock. We were expecting this. We expected as we approach 38 to 40K, we would see overall reductions in momentum and volatility as we approach resistance. So we are approaching resistance, and now we can see that 38 to 40K resistance. So going back to the smaller time frame chart, we can see the 40K level is represented by the bullish breakout target. As if we enter the resistance range from the bottom side, we are very likely to fill the range and move to the upper level of resistance within that horizontal high time frame resistance range. Breaking above 40,000 will initiate the next macro move upwards, likely to 48K. So that is the upward breakout discussed. Let's talk about the downward breakout, because this is where it becomes much more interesting and a little bit more convoluted in terms of possible scenarios. So we have a few different possible scenarios to discuss. Scenario number one would technically still be a high time frame bullish scenario. Now, this is a scenario where we would see a breakdown of the major uptrending support line, a retest of the local low range, which is going to fill the VRPV gap and retest this area of liquidity where we faked out below develop a short-term, okay, a short-term parallel channel before a continuation upwards. So if we do see a breakdown of this trend line, you'll be looking for shorts, and your first and potential last target would be a retest of around 35,900. Just depending on how the price action develops around this area, you would then determine whether or not this is developing a reversal, and you could look for longs upwards, or whether or not it is showing continuous weakness and we'd be expecting a continuation downwards. So if we do continue downwards from that point, and that level does not provide an adequate amount of support, we would be expecting a retest of this range low. The range low is sitting around 33,350. You can see it marked out right over here. And just like 38,000 and our bullish trigger, the 33,350 is a bearish trigger. Okay, we marked it out as a dotted trend line. The reason it is a bearish trigger, if we move back to this high time frame chart, we can see that we have a massive gap here in the VRPV, which takes us down to around 30,600 primarily. If we go back to the smaller time frame chart, we can see that gap here in a little bit more detail. The VRPV significantly drops off after around 34,000 and shows a massive gap to around 30,600. Of course, we do have the 32K support level. So if we do lose the 33,350 level, we would be expecting this entire gap, and again, this volatility candle, to be filled and the price action to retest. We'll show you this local high point at 30,642, represented by the local wick high, and of course that VRPV peak right over here. That is scenario 2. Scenario 3, and like I said, it is convoluted and there are a lot of different scenarios. And again, what trading is not predicting the future. Trading is putting a plan in place and preparing for possible outcomes so you can apply your strategy or with adequate risk management to capitalize on any, and I mean any, scenario that plays out. If you have your blinders on and you're focused on one possible direction, you are cutting yourself off to so much opportunity. And you may think that, you know, that's not a big deal, but if you intend on trading for 10 years like I've been trading, 8 years now, or 20 years or 30 years, and you're always cutting yourself off to 50% of the market movements, over a 20, 30, 40, 50, 60 year period, whatever it's going to be, you have missed out on so much potential. It is actually unfathomable. Okay, so you have to be objective, realistic, and drop all emotional attachment to certain directions. I have a bunch of altcoins, I have a bunch of spot positions, but I am sitting here saying I don't care if Bitcoin goes up or down. It doesn't bother me, because no matter what happens, I'll be able to scalp trade that, I'll be able to make profits no matter where Bitcoin does go. You need to get yourself in that position. So the third and final possibility is, similar to what we said over here with this parallel channel, we would develop a larger parallel channel between the bullish and bearish trigger points. So the bullish trigger point being, of course, the 38K, and the bearish trigger point being the 33.3K, which will result in something like that, okay? That would be the third and final possibility. So how does that apply to you? If the price breaks down from the uptrend, we look for shorts towards the retest point of the fake out low, okay? If we lose the fake out low, we keep shorts open, we result in a continuation and target of 33.3K. That is how you would short that movement, okay? On the upside, of course, a break of 38K, we're looking for a daily candle close level to validate a continuation upwards. So a few different things going on, guys, a few different things to pay attention to. And of course, when we are in this consolidation range and we are in compression, it is very hard to say which way Bitcoin is going to go. It was always better to long supports and short resistances. If you take a look at what I've been doing, and again, I trade in VIP, I show all my trades, I take, not all my trades, there's a lot of trades I take that are higher risk that I don't really like sharing. I try to keep the win rate around 80%. But you can see just in the last 24 hours, we took a short, okay? You can see it over here. We took a short at resistance right over here, looking for a target of the major uptrending support line. We saw that. In fact, that actually went on to hitting all targets, which is fantastic, 120% profit. And just at this base of support, we actually flipped into a long position with a made a nice 35% profit. So you're looking for shorts at resistance, you're looking for longs at support. That is how you're going to play these consolidation ranges. When you've identified a chop zone, when you've identified a range of which the price action is moving in, you have to assume the range will continue until you get a directional break. So you want to continuously short those resistances along that identified support until that range breaks, and then you'll flip into directional continuation. Now, if you continue to short along those supports and resistances, at some point you will fail a trade, you will lose a trade because there will be a directional breakout, but then you simply cut the loss, flip into a different position, and continue in that directional continuation. Okay. So much information there, guys. Let's go ahead and summarize yesterday's video and then wrap it up. So yesterday we talked about the monthly charts. We said there are two main indicators that we're looking at, but in today's video, we're going to go ahead and add a third one on top. But we'll just go over the first two really quickly. So the two most important ones were, of course, the market cipher A. And if you want more details about my settings, check out yesterday's video, and the Bollinger Bands. Okay, the market cipher A is showing something we haven't seen for a very, very long time, and that is a blue triangle. We saw a blue triangle here, we saw a blue triangle here, and we are now seeing a blue triangle here. What the blue triangle suggests is the price action will continue in an uptrend above. It's very important. The price action will continue in an uptrend above the 50 EMA, but I'll go a step further than I did in yesterday's video. It will not cross below the 2 and 3 EMA. In this instance, the 2 and 3 EMA is the 1517, meaning the price action will not cross through the 1517 EMA before creating an all-time high. That is what the blue triangle is suggesting. What does that mean? It means the price is very unlikely to drop below 25.2K again until we reach a new all-time high. Now, will this play out again? It's only happened twice, so maybe it won't happen the third time, but we've seen it twice, so we have to immediately think, well, there's a possibility we could see it a third time. Very interesting. The next one is the Bollinger Bands, and again, this one is suggesting when we break above the upper band, which we've seen twice in the past, we will result in a macro continuation higher. Okay. In 3 days' time, we will be retesting and potentially closing above the upper band. The upper band is sitting at $38,534. We do need to break above $38,534 in the next 3 days for the Bollinger Bands to actually print that macro buy signal like it has done in the past. Now, the third one I want to discuss, which we didn't talk in yesterday's video, is going to be on the 14-day chart. This is going to be our Gaussian channel. We can see that the Gaussian channel is retesting and breaking above the 2-week upper band. The 2-week upper band still has, I believe, 6 days remaining until close. I'll have to double check that. I do believe it is 6. So we are watching for a 6-day close here in 6 days' time, that 14-day close above this level to validate a continuation higher. Keep that in mind, guys. Watch your charts, pay attention. Thank you for watching, guys. And if you do appreciate the content, remember to like, subscribe, and of course, comment down below. If you're interested in the 10-unit course on learning how to do TA, learning how to assess the charts, analyze the charts, do structural and technical analysis, go ahead and check it out. Crypto Academy courses down below in the link. And I'll catch you guys in the next one. Thanks.